Trying to predict inflation is a bit like predicting the weather. There are signs in the sky that point to the possibility of a rainy or sunny day, but just like the weather, the fluctuations in the economy are largely due to factors that are out of our control. Here are some ways you can take your purchasing power back. Cut costs. The most immediate way to increase your cash flow is to trim discretionary spending. These are goods and services you want but don't need, such as a new iPhone or a trip to France. Reduce your subscriptions. Subscriptions are usually auto-debited on a monthly basis. We get them usually on an impulse for a particular purpose. Then once they've served their purpose, we forget about them. But the debits keep coming, and often at an increased price because of, you guessed it, inflation. Shop strategically. For those purchases we can't do without, it's time to get your cost-saving hat on. We buy differently when we feel more wealthy, so it makes sense to buy differently when we're feeling financially squeezed. There are ways to get what we need for less. Here are a few ideas. Compare prices to get the best deals. Buy generic or in bulk. Cut those coupons and check out those rewards programs. Renegotiate bills. Cable, cell phone, and internet companies are more open to negotiation than you think. It takes a little extra time, research, and tenacity, but it will be worth it. Here are things to mention when you make the ask: how long you've been a customer, the latest deal they've advertised, and what their competitors are offering. Increase your income. Get more from your savings. Look for financial institutions that offer higher interest rates on savings and investment accounts. Consider passive income. Have an extra room or storage space you could rent out? How about a valuable tool you could rent? For example, a lawnmower, a snowblower, or even a car. Maybe it's time to put those dusty records and old CDs on eBay. Look for savings that match inflation. Tips. Treasury inflation-protected securities might be one of the most secure ways to invest your money because they're backed by the US government and are indexed to inflation. Series 1 savings bonds. Like tips, these bonds are designed to roll with the fluctuations that inflation brings. The interest rates are adjusted twice a year according to inflation. The important thing to remember is that while you don't have control over inflation, you do have control over how you respond to it.